We are in a bubble from many perspectives and indicators like affordability ratio and price to income ratio and to those panic buying behavior earlier this year all suggest that we are still in a bubble. And we have reached the turning point, I believe, and there's a growing number of investors or citizens who believe that we have reached the turning point because we can see you mentioned that banks are cutting their valuations and developers are cutting prices in their primary sales. And compared to a few years earlier when primary flats were sold at 20% to 30% premium to secondary flats, now their pricing has come to a point of very close to secondary homes. So developers are a bit desperate to sell their inventories. But the point, the key is whether this bubble will burst or deflate orderly. And I believe it would be the later. So it's going to deflate orderly unless we have another Lehman Brothers type financial crisis. You're right. The price correction, I believe, is going to be about 15% to 20% from the peak.
Okay, so Daniel, so you think it's going to be sort of this orderly deflation, and it sounds like what you're saying is it's a buyer's market in the primary market with developers offering pretty attractive prices. But what about the secondary market? If you're looking at that, I mean, are some of the current homeowners willing to sell at a steep discount?
The secondary market is stagnant. The sales are very low because on one hand, buyers are seeing that we have reached a turning point, so they are asking for a big price cut. But homeowners, as long as they still have a job, they are not quite willing to slash prices. And although there are more risks coming, like Federal Reserve's interest rate hike, but the magnitude of rate hike would be very mild. This time could be the mildest rate hike cycle in the history of Federal Reserve. So say 50 basis points or 100 basis points in interest rate hike won't make their mortgage payment unaffordable. So many homeowners are not willing to cut prices aggressively. So the sales in secondary markets is going to be very low for some time.
Okay, and give us a gauge of mainland demand, because the mainland buyers during the bubble were really driving up the prices. What is that like now?
The demand has fallen dramatically after Hong Kong government launched some counter-cyclical measures, including buyer stamp duty and double stamp duty, because the transaction costs for mainland buyers have skyrocketed. So the investment demand has effectively disappeared. The remaining demand could be those the mainlanders who are seeking citizenship in Hong Kong, but also the immigration investment scheme has been suspended. So the demand now is mostly from Hong Kong citizens. It's a real living demand. And although we have seen the supply is now coming up to meet the high demand, it's only a balanced supply-demand dynamics compared to many years of supply shortage. So I don't believe that the supply is going to be an oversupply.